The legalization of marijuana, coupled with its expanding medical use, has created an emerging market for insurers. This was the subject of a recent AM Best special report titled Cannabis, New Opportunities for Insurers, but with Burgeoning Risks. Here to discuss the report in detail are Associate Analyst Josie Novak, Associate Director David Blades, and Associate Director Robert Raber. And Josie, can you take us through the rationale of AM Best characterizing this marijuana segment as an emerging market?
Yes, so we are categorizing this as an emerging market through a lot of discussions we've had with companies, specifically surplus lines and specialty lines. Companies, they're looking to expand their book of business and grow their premiums and grow their companies. And on top of that, we have a lot of states legalizing both the use of medical and recreational marijuana. So we have that becoming legal, but the drug is still illegal on the federal level or a country level, so these states are turning to these surplus lines and specialty lines brokers to provide coverage for their residents in these states. And it's because all of these states are legalizing marijuana that we sent a couple of our analysts to a symposium to learn more about the topic and coverage, and they came back with this knowledge that they shared with the research team and the rating staff that really helped us understand marijuana coverages and what people need, and really helped to manifest this report.
So what lines of business have become most prevalent?
So there's definitely two ways that we can look at this. First, from the standpoint of the insured, our business owners who own or run a cannabis-related business. You know, their biggest issues are going to be property liability, heightened fire risks, burglary, theft. Cannabis dispensaries are some of the most highly burglarized businesses in the country, so they need that coverage. And on top of that, they need product liability. This drug can be put into pretty much anything from candies to sodas to chocolate, so they're going to need that coverage as well. And then on the flip side, if we look at the insurers and the insurance companies, we're seeing the most prevalent lines of business are going to be our homeowners, our auto, and our workers' compensation. Homeowners, we have people who are growing the cannabis plant in their homes, and there's a huge debate between whether that's considered personal property or commercial property. And then with auto, although it's still early, we don't have a lot of data for loss trends. We are seeing a slight increase in auto accident frequencies, which is tough because we don't know if we can attribute it to marijuana because there's no test to determine if someone's under the influence like there is with alcohol. And that goes into workers' compensation. If someone causes an accident in the workplace, are they under the influence at that point in time, or were they under the influence a few days ago and it's still in their system? And then the last thing with workers' compensation is there's a big debate on if a doctor or physician prescribes this marijuana coverage or marijuana treatment, is it going to be excluded or included under your workers' compensation coverage? So those are definitely what we're going to keep our eye on in the future.
Thanks, Josie. David, given the specialized nature of the product, have coverages evolved among insurers?
Well, definitely, yes, they have. I mean, the market for cannabis-related businesses has been and continues to be primarily served by specialty or surplus lines companies, as Josie mentioned. The unique and specialized nature of cannabis businesses creates opportunities for property and liability insurers to provide coverage for, cannabis farms. Basically, you're talking about the cultivation and harvesting of different strains for dispensaries, for licensed retail outlets, and also for, let's say, the makers of any of the edible products. So when you look at non-admitted and surplus lines companies, they are designed, and they do design specialized coverage that can deal with the unique risks and emerging and developing risks presented by these types of insureds, and that's why specifically surplus lines and specialty companies have provided the predominant portion of the coverage that exists, at least in the current marketplace, for cannabis-related businesses. What we've also seen is that coverage provided on an admitted basis was largely non-existent until the efforts of the California insurance commissioner late in 2017 when he was kind of encouraging commercial insurers to step up and provide coverage for cannabis-related businesses. And what we saw shortly after that, in November of that year, the first business owner's policy that was written by Golden Bear Insurance Company, that came to the marketplace. It was followed closely by California Mutual Insurance Company providing lesser's risk coverage specifically for property owners that rent or lease properties to cannabis-related businesses. So we've seen that the marketplace has also seen the development, I think, and this is key, for the emergence of specialized insurance intermediaries whose primary goal is to kind of close the knowledge gap of these cannabis-related businesses that may not be aware of the insurance coverage that is out there for them, or which insurance companies could provide coverage for them. And so these specialized kind of, pure play companies are coming to the marketplace, providing that specialized knowledge and helping these cannabis-related businesses in that way.
Now, marijuana has been legalized in Canada. What have we learned there as a result?
Well, if you think about it, all right, so in October of 2018, it became legal to produce, distribute, sell, and possess cannabis in Canada. It had already been legalized from a medicinal standpoint since 2001. But the market is obviously still developing when you talk about being fully legalized, just in October of 2018. So from an insurance perspective, we anticipate, new market opportunities for insurers now that these businesses, there'll be more businesses, being created, and there'll be more opportunities for, insurance companies to come to the fore. So I think from the U.S. market perspective, we're going to learn as we see the Canadian market grow. We're going to learn and kind of look at that and see, what insurance companies are doing for those exposures, and continue to see and inform us, what we're going to look at and what we're going to look for in terms of emerging risk, in terms of, how we're going to address from a risk management standpoint and talking to our companies, what we're going to look for there in terms of how companies are determining which lines to write, which lines to avoid, which classes to write or to avoid. So I think the marketplace is still new. The opportunities are still developing, but it's something that we, AM Best, is still going to continue monitoring. And I think as more data is produced over time, it's going to give us the opportunity to truly analyze that. And insurance companies are going to have more to analyze and develop their strategies and their products off that as well.
Robert, what are you hearing as far as the growth opportunities go, and as far as the risk appetite is among insurers?
The risk appetite topic has been very interesting. It was really no surprise to us to see the surplus lines companies go into this field. They have very defined risk appetites, but they also have a very defined core competency in their ability to price and set terms and conditions on their policies. So it fit very well with the surplus lines companies within their risk tolerance levels. What we've also seen, though, is some carriers still aren't really comfortable because of the lack of time. Really, some of these policies have only been in effect 2 to 3 to 4 years, so needs more seasoning in this field. Also, some reinsurers are not really ready to step up and provide coverages, so some of the limits that are being provided are lower, on the lower side, on the property side, 1 million, 2 million, 5 million. We haven't seen much higher limits. There's still a little apprehensiveness in the market before they're going to line this. There's also still work on some policy provisions because they're not really standardized across companies and across lines of business. However, because this market is highly regulated in the states where it is legal, some things do offset the risk mitigation concerns. There's a high level of security that's expected in a lot of these facilities with video cameras and access to the facility. There's a high level of the regulation of the product and how well that is being, how that's being dispensed and how that's being controlled and how that product is being managed. So that kind of offsets some of the risk mitigation concerns and keeps these exposures inside the defined risk appetites. And as Josie said, we did note in our report some of the concerns regarding legalized marijuana, and some of that puts marijuana right outside some companies' risk appetites, how this impacts homeowners, how this impacts workers' comp, how this impacts personal markets. So some companies really have said this is outside our risk appetite, we don't want to touch it at all. As far as growth is concerned in the industry, insurers are expecting the volume of premium to grow as more states legalize the product and as more states have this infrastructure to support the supply chain, the cultivators, the producers, and the dispensaries. But that will also lead to greater risks in each of those lines. The more products that are being produced, obviously the more risks that are available that could be discovered in the market. But we're expecting, the industry is expecting, greater premium to be produced. And that's really not just an insurance industry side. The entire marijuana and cannabis market is being monitored by beverage companies, soft drink companies, consumer product research companies. They're all expecting that it's going to be growing going forward, both on the medicinal side and on the recreational side.
How will the conflict between state law and federal law when it comes to marijuana impact the insurance market?
Yeah, that's very interesting too. I think the best way to describe those conditions is inconsistent. Federal law obviously still considers marijuana and cannabis products illegal to grow them, to produce them, to possess them. We've seen over 30 states legalize marijuana on a medicinal level. We've seen about a third of those legalize it on a recreational level. So it's been very interesting to see that some states have legalized it, which is opposite of the federal government, but even within a state, counties, cities, local jurisdictions, some are pro-marijuana businesses, cannabis businesses, and others have said, no, we're not interested in those kind of businesses. So it's made it a real challenge to work around those laws. However, a lot of the insurance companies are working on that state level in conjunction with a state regulator or those municipalities that are looking forward to having the opportunities in this industry to develop products and develop coverages and work within those regulations. So it's an interesting dynamic because some insurers are going to look at this as an opportunity and say, let's work with what we have, let's work with what's been established, and others look at it as a threat and say, we're going to stay over here until all of this legality is worked out. And that's also, again, not just related to the insurance industry. We've heard from other industries such as law firms, accounting firms, financial institutions that they've kind of taken that same side also. But even there's been opportunities. We had one insurance company relate to us to try to dispel the notion that it's marijuana and it's all under the table. They related to us that every insured has always paid them with a check. It's not been cash under the table. So there are financial institutions, especially on the state level, that are also very supportive of the industry, just as some insurance companies on that level are supportive of the industry.
I think it's actually an important distinction to make when you're talking about from a legal perspective. One of the differences actually also related to Canada is that Lloyd's, which again is staying away from this business in the States because it's illegal federally, Lloyd's is open to providing insurance for its syndicates to provide insurance for cannabis-related businesses in Canada, as long as you stay, in compliance with the local Canadian, requirements. And I think it's also making sure, as it's circumspect in its efforts in that regard, it's making sure its managing general agents also are staying on the right side of the law as well in this pursuit. But I think that creates more opportunities in the Canadian market, and to the extent that it were, if cannabis were ever legal from a federal perspective, it would definitely have an impact on the market to have those Lloyd syndicates also at play in the marketplace.
Thanks, David. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.